Let's see if I can make sense of this. I think too many people are looking too deep into this. A debit is on the left, a credit is on the right. That's all it means. And if you take a look, here's my fingers approach. If you take your 2 fingers in the end and you bring your 3 in the middle down, there's all your debits. And then reverse it for credits. There they all are. Now, what a debit and a credit means is incidental. Doesn't mean anything. The plus means you got it, and the minus means you lost it. So under assets, you get cash. You get accounts receivable. You get supplies. You get a prepaid expense. You get a property, plant, and equipment. It'll all be a debit. You got it. When you lose it, it's a credit. Now, the one contra asset, which is against and counters depreciation, will drive this down, and it will be actually a credit because it's a negative. Liability, same way, it's a payable. You owe it. These are all owed. Unearned revenue, you still owe it to somebody. When you get it, it is a credit, and when you lose it, it's a debit. So when you pay it off, you'll debit it. When you gain it, credit. So if you bought some supplies on accounts payable, you'll debit your supplies because you got them, and then you got that bill as well. Capital, this is value. When you add to the company, it's a plus. When you lose from the company, it's a minus. Now, drawing is 3-2 down here. This is 3-1. 3-2 is the opposite. So instead of going to the business, it goes away. So, for instance, you're the owner. Sometime during the month, I'm going to move cash here. So I'm going to credit cash because it left the asset, and it's going to go to drawing. And then at the end of the period, it's going to go away, and it's going to go away from the business. So I'm going to debit capital because it left the business, and I'm going to leave drawing because it left drawing. Fees earned is pretty easy. It's a credit here. Every time you get a fees earned, you're going to credit. When you lose one, which doesn't happen very often, it's a revenue. It's a debit. Expenses, expense means you've paid it. Salary expense, rent expense, advertising expense, miscellaneous expense. Any expense is going to be a debit because you got it. If you lose an expense, it's going to be a credit. Now, you're not going to see the losing of these two until chapter 4, so don't worry about that because we have to wipe these all back down to 0. You might remember that from an earlier chapter, might not. So hopefully this helps. Remember, debit, left, credit, right, and that's all it means. The word debit and credit, you cannot think about businesses, you cannot think about banks. It just means on the left and on the right. And this will help you remember all your debits right here in green. Reverse it for all your credits, and drawing is always the opposite of capital. I hope that helps. I have a video on using the fingers approach, so I hope that will help you.